Hello and welcome to this very special conversation where I am joined by India's best known investor Rakesh Jhunjhunwala. Rakesh, pleasure to speak to you after such a long time. It's been a patchy performance for the market for the last few months. Do you feel worried that something is not going right? Are you disappointed with the string of disappointing earnings which has plagued us over the last few weeks? Would you say that you're a bit more concerned than you might have been 6 months back?
Udayan, well, you have an index which has gone from 5,200 to 9,200 in maybe 2 years. Someone who ran a marathon here, he has to pause or he'll have a heart attack and die. What are our expectations? You go from 5,200 to 9,200. You outperform the world for 2 years continuous, right? So whether I worry or not, a market pausing at this moment and at that time, I think it's, for the fact that it has not risen beyond that and it is pausing, I think there's no cause for worry at all. I would be worried if it, just goes on going up and goes on going up. I think the expectations are unrealistic. So,
that point I accept absolutely, Rakesh.
No,
my question is whether you worry about the reasons.
Well, reasons. See, what is it that pulled the market up? Right? There is a cyclical upturn in the Indian economy, there's no doubt about it. India is structurally a very, very good story, there's no question about it. That we had a government about which we were optimistic, and I'm optimistic today also, right, which will bring about a lot of change. Decline in inflation because of decline in commodity prices and a consequent decline in interest rates. My good friend Mark Faber has said that bull markets go up on rising profits, declining interest rates and mysticism. So we have had, we are having and we are expected to have further declining interest rates. We are setting the base or the stage for a very good growth and a continuous growth in earnings. So, market will pause, has paused. I think market is going to take time. I don't think we have to cross 9,000 in a hurry. And if it takes 3-6 months, I'm not bothered here. And it's going to take time is my opinion.
Sure.
Market's not going to go up.
Let me turn the question around. Would you say then that in the next 3 to 6 months, the base for the next phase of this bull market will be formed, whether it's 8,000 or 8,200 or 7,800 or 7,500. Do you think in the next 3 to 6 months, we'll form a base at a level which will probably not violate for maybe through 2016, 2017?
No, I think if we believe, if I say that India is in the mother of all bull markets, and if we believe that bull market is alive, then I think the base which we form, that bottom should never be violated here. See, I had said even 2 years ago, 3 years ago, when will you have a true bull market? And when will the mother of all bull markets be confirmed? We crossed 6,300, we came to 9,200. Let us suppose we have made the bottom at 8,000. Maybe it could go to 7,900, maybe 8,000, we already made it, we don't know. It could further go down also, I don't know. When it crosses 9,200, it's absolutely tested. It's a bull market. So, I would tend to say, but I don't know the time period markets could test us for 3 months, 6 months, 9 months. But market is going to test us, let me tell you. Market may give another chance. It's not so easy to make money in markets, Udayan. Markets are going to test us. And I believe.
But what makes you believe, Rakesh, and that's my central point, which I started by asking you, what makes you think that we might be in for testing time for another 3 to 6 months? Is it because the earning support is not coming through? Is that your central point of concern?
Earning support and valuations. See, the general Nifty, there is a section of the market whose valuations are unbelievable. You have mid-caps, at 25 times you get analyst reports, mid-caps, okay quality companies, 25 times the FY17 earnings. I think there is no scope to go up currently. So I think unless and until, a certain, so you have those and there are some very good quality companies where everybody is piled up and valuations are unbelievable. So I think those companies this year take time. And also, see, the fact is that earnings have disappointed. Now, the whole premise is that the macro is good, the interest rates will have fallen and will fall, earnings will go up. We have had a gain. Now we need empirical evidence. Market needs to be convinced that, actually there will be a big cyclical upturn. There will be a big structural upturn. And I believe it will happen. I can't tell you the time period.
What is your best guess though, Rakesh? I mean, if I had to pin you down on that, I know this cannot be predicted because it's already taken longer than what most people would have thought. This earnings acceleration that everybody's been hoping for. But if you were to stick your neck out and say, by the end of this year, by the end of this fiscal, what is your best guess on when we'll start to see the first of this upturn in earnings?
I think third quarter.
Third quarter of the calendar or the fiscal?
Of the fiscal. The real uptick, which will give conclusive evidence. I don't think the first quarter is going to show you anything. Maybe second quarter. And another thing also, see, then is with respect to the government. Anyway.
Sure. But what disappointed you most, Rakesh, about the earnings picture? Some of your big holdings, as all of us know, companies like Lupin, usually they do not disappoint with earnings. Were you disappointed this time that such companies were also showing some kind of slackening of momentum?
No, but the expected, you had Lupin went up from 600 to 2,100 Udayan in 15 months flat. He earned 24, then he earned 41, he's earned 58 or 55. He's grown, he's more than doubled in 2 years. Then there is disappointment. Udayan, in my holding of Lupin for 12 years, there were 2 3-year periods. Therefore, 6 years Lupin never went up even 1%. And see ultimately what happened. So, Udayan, every rise has to be digested, both in profits and valuation. I'm not disappointed by Lupin at all.
Fair enough.
Look at how it has risen and look at what the prospects are. For 1 year Lupin doesn't go. What is the difference? A stock, Nifty, it is the highest appreciated Nifty stock of the last 12 months. So, sir, see, we have to, let us be rational. Let us look at expectations in relation to reality.
Fair enough.
If Lupin went from 600 to 2100 in 18 months, I should expect the next 18 months 4200.
That never happens. I take your point. Let me come back to this point about high valuations that you spoke about. If I remember correctly, a few months back you said the same thing about private banks. These are banks which everybody owns nowadays. You look at any portfolio there is Yes Bank, there's IndusInd Bank, there's Axis Bank. They're notably absent from your portfolio last I checked. Is valuation a point of concern in private banks for you still?
Well, then what happens, I wanted to buy a house. I didn't buy the right house. Now I can't get off the other house and buy the other one. So I think I misjudged. I think I missed it. Then let me see, just because I have a large portfolio doesn't mean I have not made mistakes. I have made many more mistakes, and as time passes and as I mature, I realize how many more mistakes I have made than the right ones. I always looked at return. I always looked at EPS. I never looked at book value. I never looked at return on assets. I never looked at quality of management. I made the mistakes, sir. But I feel one thing about the private banks, that except 1 or 2 banks, I don't see much difference between, say, a very good public sector bank and a very, very good private sector bank. Because I find they lend to the same people. So I don't know. And for this kind of valuations, you got to really have faith. I mean, to buy with these valuations, keep buying. And I missed the bus, let me tell you. Maybe the grapes are sour for me.
So,
let me
if you were to get another opportunity, Rakesh, maybe the market corrects more. Say we go down to the levels that you just spoke about, 75, 70, 800, and you find some of these private banks 10-15% cheaper from where they are today. Would you consider buying it, or do you think even at those price levels they won't be attractive?
See, first of all, I never said 7,500, 7,800. You can replay the interview. I said 8,000, 7,900. I said markets in a consolidation phase. So, let me correct you then. See, what I'll do at what level, then I don't know. I don't plan what I'll do when I come to the office. Right? So, if those valuations come, we'll have a look at it. We'll see what we do. One thing I will tell you, I am debt free. I have no debt for the first time in my life. When I entered the stock market in 1985, I had 5,000 rupees. I built my life on debt. Today, I have no effective debt against equity. And I'm not going to invest easily because I don't have debt.
Sure.
And that may be a lot of personal reasons involved in it. Of course, I don't rule it out. Tomorrow, if I see opportunity, I'll take any amount of debt and buy.
I'm sure.
So I don't know what I'll be doing.
Yeah, but you made the interesting point about a top quality public sector bank being not terribly different from a high quality private sector bank. Would that translate into saying that if you could find a State Bank of India at maybe 1.5 times book versus a private sector bank at 3.5 or 4 times book, you are inclined to look at an SBI favorably?
I am refrained to comment on individual stocks.
Okay.
You may draw any conclusions you want, that's not what I'm saying.
Okay. So this point about 8,000, 7,900, you think this correction or whatever you want to call it will take the nature of a time-wise consolidation for 3 to 6 months? You think most of the price damage is done?
I think it will. See, to predict the price damage, whether it is done or not, I don't know. Right? But I feel, see, there could be further price damage. Hello?
Yep.
Hello?
Go ahead.
I can tell you one thing. We know the top. I don't know the bottom. The bottom could be 5%, 7% below this. Right? And the future markets will also depend on what the markets are. I mean, as I would tell you 2 years ago, thumb the table, do Ina, Mina, Mina, Mo and buy. I don't think this is that kind of market. The risk-reward ratios are not so attractive according to me. And I reserve the right to be wrong.
Sure. So, you would be surprised then if you saw the market going to 9,000, 9,100 immediately and take out that top?
I would be surprised. And remember one thing, the stocks which are holding up the Nifty are the financials. They are more than 30% of the Nifty. And we have a money policy coming up on Tuesday. Market expectations, there will be an interest rate cut. Let's see what happens. And let's see how market reacts whether or not there is an interest rate cut. And if markets don't go up after interest rate cut, then surely that will be a sign of weakness.
Your gut feeling is that 25 basis points is in the price. The market may sell on that news?
See, my personal feeling is Mr. Rajan is unpredictable. I don't know what he will do. But market is expecting a rate cut. At least all the analysts are. As they were polled by Bloomberg.
Time for a break. I'll return in just a couple of minutes with Rakesh Jhunjhunwala. Don't go away.